Hi, this is Dave Aquino with Microquant, and this is the free video for Friday, July 18th, 2014. I just wanted to show you guys a quick intraday trades that we took today. Google reported earnings yesterday, and they were better than expected. Google opened up about 20 points higher today, right around 601. Now, what's very interesting is a lot of people like to trade options on stocks that are having an earnings announcements, maybe through an iron condor or some sort of a spread type position. We don't like to do that, or I don't like to do that, mainly because I don't know what the earnings report is going to say. So I don't know if it's going to go higher or lower. But once we do have that report and we see how stocks behave after hours or pre-market, we get an idea of those different levels pre-market that may give us support and resistance levels. So what we basically did, and today is Friday, so options are pretty cheap. They're highly leveraged options that expired today. What we saw in Google, we saw an initial fall from the opening price, found a little bit of support around 596.5. and then proceeded to make this very nice head and shoulders pattern right around 601. Now, the 601, 602 level was a resistance level that we had from the pre-market hours, and we went ahead and traded in the same direction as the market at the same time, and Google managed to fall from there. So this level right around 601 all the way down through the MQ trend dots at 590, roughly 596, is roughly a $4.5 to $5 move. On $4.5 to $5 move in options, roughly around anywhere from 400 to 450 per contract. I was trading a large number of contracts, so they were so cheap, but still, even one contract, that is a significant profit in a move that probably occurred over the course of just 4 to 5 minutes. Pull back in Google, take your profits right there. Again, very nice head and shoulders pattern. Continue to watch Google, how it bounced, and what we also see again here. First high, second high. This is a bearish divergence on a tick chart. I'm showing you how it's behaving on the half-size tick chart. It was a head and shoulder double top, bearish divergence, and we fell. So again, here MQ trend dots acting like a parabolic SAR right around 600, and it falls from 600 all the way down to roughly 595 is about the level I took my profits at. Another $5 move, another potential $400 to $450 profit per contract. So you put the two together, you're looking at almost $900 potential profit. We do trade Google a little bit more later on, but those were the two clearest examples of how opportunities can be taken in stocks that report earnings, whether good or bad, just as long as they move. And the fact is at least you know what's in front of you. You don't have to guess and hope that the options and the stock doesn't move past your short strike if you're writing spreads. What you're really trying to do is just take advantage of the increased trading activity in the stock, and the fact something like Google is a $600 stock. When it moves, it'll move in large dollar amounts, and large dollar amounts with options translates very nicely into profits.